Hey, it's Clay, and this will be a video chart on ticker symbol HX. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like several days worth of time, it's actually today's price action broken down into 30-minute time slices. I like to this time frame. I think does a good job of telling the quote-unquote story of the price, and then makes mapping out levels of support and resistance a bit easier to see. If you're thinking that this chart's kind of confusing, this chart's kind of sketchy, a little shady, I fully agree. This chart is pretty goofy. Yeah, the price made a great move up, but then there was a pretty big pullback here, but it's not like the price totally crashed. So yeah, if you're feeling a little, I'm not quite sure what to think of it, you know, I understand, I'm with you, but in my mind, there's kind of a level out there that is going to tell us really, is this chart bullish or bearish going forward? And that level is right here at the $2.10 mark. Why is 2.10 important? Well, hopefully we can agree on the logic that, you know, we want to see some sort of progress being made, and that going back is not really a good thing. So with that kind of terminology in our mind, let's kind of look at this 2.10 mark. I'm not saying this will occur, but let's say the price comes down here, breaks down through it, and then just continues on down. What would you have in this situation? You would literally have the price right back inside of that range where it just was. And not to insult your intelligence, but price movements that quote-unquote go back to where they were, that's not a sign of any sort of strength at all. In fact, in this chart, I would say that, you know, that puts it at pump and dump status. That would imply that the price has made a great move upwards, and then within a relatively short amount of time, the price has gone right back to where it started. Again, if that's not a pump and dump, I don't know what is. Again, I'm not saying that'll occur, but that's why, you know, $2.10 is important from that, side of things. Whereas let's say the price comes down here, however, in this case, goes sideways and then start to work its way back upwards. What would you have in this situation? Well, you'd have a set of lows here. You'd have that low down there. If you picture those as stair steps, well, hey, now at least you have stair steps progressing in the upwards direction. And progress, well, that's what bullish movements do. If something has some genuine strength behind it, then it's going to make progress over time. Sure, things can pull back. Nothing can go straight up, but you want to see is the overall flow going upwards, and that's where the 210 marks comes into play. So in many senses, 210 is kind of the vocabulary definer, meaning is the price, quote-unquote, going back? Again, that associated with bearishness, or is the price, quote-unquote, making progress? That associated with bullishness. So let's see how the price reacts around $2.10, and that'll, at least in my mind, makes things much more clear in terms of, is this stock truly bullish or bearish? One of the biggest questions that I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together a free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then click on the image that is up on the screen right now and I will email you the guide. The guide itself is very short and to the point, and best part, it's completely free. Thanks for watching the video. Let me know if you have any questions.